Hey traders, welcome to the channel, The Blackjack Trading. I hope you're all doing well. And today we are going to have a very interesting video in the smart money concepts, including the very important topic known as the liquidity. So in today's video, we are going to very much have a conceptual clarity on the very important topic known as the inducement. So many of us SMC traders have already acknowledged the concept or the known word as the inducement. However, they do not really understand as to what is actual inducement and how to use it on a regular basis to make consistent income from the forex and the gold market. So let's move on to the charts itself, and we are going to understand practically of what is actually liquidity in the person of inducement, and also how to use it on the regular basis to make consistent income in the market. So first of all, let me give you you can say theoretical example of how the market works. As you know that in the previous videos of the SMC, I have made you very much clear about what is market structure and how the things work in the market. However, in this concept, we have to understand that the price actually move in swings. So the major thing is that the major, or you can say the nature of the price is known as the swing nature. So as you know that the price never actually travels in a straight line. So let's say if the price wants to reach from a point 100 to 110, it will never be like this. Rather, it will be something like this in the real charts. And this is where you get confused in the market. It's very easy to trade in such a market. However, it's not so easy to trade in these markets because the price gives you a swing nature. That means the price gives you a upswing, then a downswing, then an upswing, then a downswing. So let's say if you buy anywhere where it's not correct or which is not correct, what will happen is, let's say some traders do the breakout trading and they wait for this breakout to happen. And while they take the trade in this breakout, what they do is they put the stop loss on the nearest lows over here, and the price just does what the price creates a sell swing in the market, taking out their stop losses and then finally going towards the upside in the major direction. And many traders, because of this concept, have a very huge regret in their you can say technical analysis, that whenever they try to buy, the price hits their stop loss and then majorly moves in the you can say in the right direction, on the favorable direction. So how to counter it? Okay, how to counter, you can say how to counter the SL hunting. So basically what happens is, whenever you try to take a trade in the real direction, let's say the market is something moving like this, what happens is you try to buy at some point which is actually not correct, or the price is able to take your stop loss very easily and then finally goes in the right direction. So that is what you have to understand, that this SL hunting goes on and on. There is no full stop to it. It's a continuous concept, or you can say that it's a continuous activity that is happening in the markets every time, every tick, every candle, let it be any time frame. So liquidity is very important when you try to, measure your concepts in the SMC, or you measure the concepts in technical analysis and understanding exactly where to buy. Okay, so the question that we are going to solve today is where to buy or where to sell. So that is very important, because if you buy or sell from an exact point, then you have higher chances of not getting your stop loss hit and taking profit in the real direction. However, if you take the trade in the wrong direction, or let's say take a trade in the wrong area of interest or point of interest, then the market is certain. Okay, the market is certain to take your SL in the way. That's one truth that is happening to all of you, and this is one of the major reasons that you're not able to make profits in the market. So today we are going to understand, if we want to understand, or let's say if we want to counter this concept of SL hunting, you have to introduce a concept of inducement into your technical analysis dictionary. So what is this inducement is, if I call it in English, that it means simply inducing someone to do or act, or in this case trade, in the way where the market is not going. So inducement is basically when the price gives you a false breakout, or let's say sometimes gives you your SL hunting, because of which you are thinking that I should be selling from this point, or I should be, let's say, buying from this breakout, and then finally what happens that the price creates something like this. And this is very much happening to you. If you can relate, and if you are a real intraday trader in the market, you know that these things happen majorly very much times, or various times, that it induces you to do, or you can say act or trade in a certain way where the market is not going, or even taking you to a right direction trading, letting you trade in the right direction while taking away your stop loss and then finally going in the right direction in the market. So what is this inducement in technical analysis is, as we know that according to the market structure, or you can say the Dow theory, when the price is an uptrend, it actually moves something like this. Okay, it keeps a, you can say it's creates a chain of higher highs and higher lows. The price is creating a series of higher highs and higher lows, and when the market is downside, the market create a series of a lower highs and lower lows in the. So this is how the actual price moves, creating some swings in the market when it is an uptrend or downtrend, and when it is sideways, you will see that the price will create something swings like this, where it is not giving any breakout to the major high or the major low in the market. What you need to understand is what is the real market structure. So when the price is doing something like this, many traders does what they mark this as a breakout structure, or they say this is a breakout, but this is not a genuine breakout. Okay, why? Because the price has not taken any inducement in this swing. So what does it mean? That when the price is going upside, it will do something like this. It will create some swings like this. However, the real resistance, or you can say the real dominance of the seller, can be only categorized or introduced or identified when they take out the previous liquidity in the market. So it's very highly important that when the price breaks out this previous liquidity, only then we can say that the major sellers have entered into the market. Why is it so? Because they have shown their power by taking out the stop loss of the recent buyers. They have shown the introduction of the capital by showing the real, you can say, taking out the stop losses of the previous buyers, and then finally letting the market create a downswing or a sell swing in the market, and then finally you will see that the market will move something like this. And that's where you actually get confused when in the direction, or you actually get very much not be able to take a decision whether to buy or sell, because according to you the market has created a lower low and it should go downside, but that is not the real case in the market. Why so? Because the price is actually giving a breakout structure over here, and this is your real chalk in the market. Okay, similar in the case of a downtrend, when the market is in making or creating a series of a lower high and lower low, you have to wait for a point where the price creates something like this and takes out the previous stop losses of the sellers in the market, and this is really known as the dominant buyer in the market. And when the price or the buyer shows the dominance, only then we can say that the upswing has started in the market. And after the upswing, what will happen? The price will create a downswing, something like this. And you need to find your point of selling, not from this moment, not from this moment, or not from this moment. It is the exact price where you need to find your selling from this level or from this level in the market. Okay, so these are the two major points when you need to start selling in the market, and you need to find the real resistance and the real support in the market. Now let's go on to the chart and have a look at the real example of as to how the price is moving ahead, and if this is some kind of pattern, or this is the some kind of price action that is being forming in the market. How can I decode it well? So this is the day of the Friday, 19th July 2024, in which we are trying to decode how the price is moving towards the downside, and where should I catch the swing and where should I not catch the swing. Okay, so let's start talking from here. As you can see with the naked eyes, the price is trying to move towards the downside. However, what we need to understand is this point, that when the price is moving downside, what is the price action of the swings that are being created in the market? If you look over here, the price is moving downside. The price created an upswing, then a downswing again, and then finally an upswing. So what did it happen over here? While falling downside, like look at this, the price is actually falling down, 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 down. And this is the first major point where you will see that the price has taken out the high of the previous candle, or you can say the stop loss of the previous sellers in the market, and then finally going towards the downside. And this is how the price creates a swing. So as I told you, price creates a swing of lower highs and lower lows as the price is going downside. So at this point, what we need to understand is when the market is going downside, it is ought to create a support in the market. The market cannot fall in a straight line. So we are waiting for what? We are waiting for some kind of strong support in the market. And as soon as the price takes out this previous liquidity over here, as you can see that the price has taken out the stop losses of the various sellers, those who have sold from this level, as they saw the breakout in the market, and they started selling, putting their stop loss on the nearest resistance over here. What did happen? The price took upside and take out all the stop losses of these you can say sellers in the market, or the early sellers in the market. Okay, and this is where you are creating your problems for yourself as well. I know that many of you are doing the same mistake and you're getting your stop losses hit. So what happens over here? This is the point in the market where you need to understand that this is the real point, which is known as a breakout structure, or the price will, if the price takes out this major liquidity, it is really the certain point where we can expect that the market will go downside. So where to look for selling now? as soon as the price is going downside, creating a swing of a lower high, because after the creation of a support, if the price is not able to sustain on higher lows and the price should be going towards the upside, we cannot take a buy. This is the major support in the market. So when the support is created, there are two factors. Either the price creates higher lows and then try to move towards the upside, or if the price creates a support, then the price again creates a series of lower highs and lower lows and breaks that support. And in this case, that thing happened. The second case happened where the price is not able to sustain itself towards the upward. Okay, as you can see that after creating a major support over here, after creating even a support over here, what did happen? The price broke the support and creating a series of low highs and lower lows in the market. So as soon as this support is, you can say, broken in the market and the price creates a series of a lower high and lower low, you can start selling in the market from this point, putting your stop loss somewhere on the high of the previous candle, or you can say open price of the previous candle, and targeting towards the downside for 1:2 and 1:3. Okay, so this is how we should take the trade in the market. Now, if you will continue the trade over here, what had happened over here, after giving us a break of structure, the market moved something like this, and the price finally created the swings in the market. So where is your inducement? This recent high is known as your inducement level in the market. Okay, so this recent high will be regarded as the inducement. Once this inducement is taken out in the market, only then we can regard this major you can say price action of this major level as a support. And in the future, you will see that the price has actually gone towards the downside because the major structure was in downside only. And also, if you will look over here, this highest point before the real break of structure, this highest point is known as the change of character. And looking at this change of character, you can analyze, or you can very much observe it from here, that the price has tried and tested to break this major high in the market but failed to do so. The price created a series of lower highs and lower lows, and then finally going towards the downside only. And this is how we actually understand where the real direction of the market is. We are not confused with it. Why? Because we know now which is the real point. So we will regard this as the major resistance and this is the major support in the market. Now we have to understand how to take the trade. So once the price confirms, once the price starts creating a series of higher highs and higher lows, you can say that the price has started in a, you can say started creating a upswing in the market. And while doing this upswing, price actually did what? Price confirmed this major support as a break of structure. And if we take any sell trade from this level or this level, then we have to target this major liquidity or the external liquidity lying below this level. So this is the major external liquidity that we are trying to target in the market. Now, in this case, as you can see, the external liquidity was very near. That's why we got only 1:2. However, in these cases where you are having a good liquidity levels of here, okay, so what we are going to understand is if we are having this huge range of the market, and if you find the real resistance in the market and you find the real point of interest where you should be selling or buying, then you have a huge chance of getting your risk rewards more than 1:8. Okay, now what is the second part over here? Once we have confirmed the support in the market, we need the market to stop somewhere. We need the market to create a series of lower highs and lower lows so that we can say that internally, once the prices, stop this creating this major buy swing, we need to see the lower highs and lower lows, of where we can understand that the price is again into the downside direction and we can start trading towards the sell. Okay, so what happened over here now, that the price is still creating a series of higher highs and higher lows. As you can see, look over here, the price is beautifully creating a series of higher highs and higher lows, and not even a single lower low is over here. So why will I take a sell trade? Right, so price actually created a higher high till over here, and this is the first time from this high, major high, you can see this is the first time that the price created a lower low. Price took out this major inducement over here and showed us that this is the major resistance. So if the price breaks this resistance, okay, if the price breaks this resistance, so let's forget this about the chalk and let's talk about what is in the range in the market. If the price is able to take out this high in the market, okay, then it is high probability that you should not be selling and the price will be going towards the upside only. But if that doesn't happen and the price is able to sustain, that means this major resistance is able to sustain the creation of lower highs and lower lows, then it's the best way to sell in the market. So what happened from here is that the price created a, you can say again support from here. The price started creating a series of higher high again and did what happened, then the price created again a lower low over here. Okay, so there are two things that you have to remember. First one is that once the price has created the resistance, as it started the pullback, okay, this is where you need to start looking for your entry in the market. Before this point there was no entry, but at this momentum where the price has created the resistance or confirmed that this is the major resistance over here, you need to start for looking for selling in the market. Okay, so combining the concepts of inducement inducement and liquidity, we are trying to estimate where we can start selling in the proper direction in the proper way. So while price created this major lower low, you can see that there are some blocks over here which is acting as a resistance, or which is acting that the price might try to retrace from here. So first method of selling is known as the order block selling, where you can find a genuine order block. And we will, in the coming videos on this channel of the blackjack trading, we are going to come with a lot of SMC videos. So do not forget to subscribe to the channel, the blackjack trading guys, and hit the bell icon so that you can get every update of my video. So hit the bell icon guys. Okay, so coming back to the topic over here, the first method of selling is, starting selling from this level in the market, and then started, you can say, pointing the stop loss over this above, you can say, resistance in the market. Because if this order block fails, as I told you, then we will stop looking for selling opportunity, we'll be looking for buying opportunity. Okay, so this is the first method of selling, where you can actually target till the downside over here. As you can see that the breakout structure is over here, and the risk reward in this case is 10.84. Okay, you have to understand this is a very good risk reward in the market. And in a 1 minute time frame, as you can see, this is a 1 minute time frame. It's not very you can say time taking activity to realize this 10.84 risk reward in the market. Okay, so what happened from here is, as soon as the price gives us kind of a series of resistance in the market, we first took a sell from this level. We were able to proceed or succeed very easily. Now comes the second point of entry, where you have to understand how can I take the second entry. So as I told you, while selling in the market, we need a series of lower highs and lower lows, not higher highs and higher lows. So looking at this major support in the market again started creating a series of higher high. And if the market would have created a series of lower high and lower low, I would have started selling again, pointing towards the stop loss and then targeting the major breaker structure. Since this was not the case, as you can see, the price again did what? Again, price majorly broke down this major support as well, and then again went back up again. Now from this point, if the price would have started creating another higher high and higher low, this point is a, you can say, this scenario would be a point of weakness, and you should not be buying in, or you should not be selling into, because the price is again creating a series of higher high and higher low, and there's a high probability that the price will take out the external liquidity from the upside and not the downside. But at this point, what can I see is that rather than creating a series of higher highs and higher lows, the price actually went upside, and from here the price went down again towards the upside and again towards the downside. So this is the exact moment which I was waiting for. This is the moment where you can start selling in the market, because as you know that if the price wants to go down, it will create a series of lower highs and lower lows rather than higher high and a higher low. So this is the major point that you can start selling. You can put the stop loss on the previous high like this only, or you can take any high of the candle, and even you can put the high as this major high as a stop loss as well. But my major you can say stop loss is, whenever I take a trade, I put the you can say stop loss on the previous candle, on the high of the previous candle, which is somewhere over here. Okay, this is the high of the previous candle. As you can look properly, if the price it stopped over here, so I'll be starting my trade from this point, putting my stop loss somewhere over here, and this is where my trade started, and I will be targeting towards the major breaker structure. And even after that, till the time the price can take out the inducement. So in the coming video, I will also tell you how to trail your stop loss, guys. It's very important to trail your stop loss, because let's say if I only mark till over breaker structure, then I will be getting 5.36. But if you will look over here, the price has started creating a series of lower highs and lower lows and continued the momentum towards the downside until this major high was broken. So I can trail my stop loss till over here, this major high, and I can expand my profits from 5 risk reward 5 to 6.73 in the market. So this is the first time another inducement was taken out over here. As you can see, this was another inducement that the price has taken out. That means what? This new low. So this is your inducement, and this new low will be marked as your breaker. And we don't know if the market will actually break this in the future or not, but that's not the question right now. We need to understand. And please do let me know in the comment that if you will be able to understand this trade or not. So coming back to the next point, once the price starts going towards the downside, the price will another create another major support in the market by taking out the inducement. And from here, you will see that the price will create a series of higher highs and higher lows like this. Okay. And what did I tell you? That we cannot sell. We know that the major direction is in downside, and also we are going to mark this as the new chalk over here like this, because this was the highest point from the breaker structure. So what we need to understand from here is, internally, what is the price doing? Till the price is not creating a series of lower highs and lower lows, we are not going to sell. Do remember this fact. Okay guys, so from here, what did happen over here? So price over here, price created a series of a higher high, higher low, another higher high, higher low, higher high, higher low, and higher high. Okay, and price broke all the major resistances over here, and you can see that this was the first point from this resistance major. This was the first point when the price created a series of a lower high and lower. Okay, so this is your first entry, you can say, where you can start selling from this level. Or if you want to wish that you do not want to take the trade on the breakout and you want to trade on the order block, then in my future classes or my future videos, you will see that this is the major order block over here. Now, I'm not marking this because this is a mitigants over here. There is a proper logic reason why this is only known as the order block, which will be revealed in the coming videos, guys. Okay. So what did happen from here? Once the price starts creating a series of a lower high, lower low, first trade you can take is on this breakout and putting the stop loss on the previous high of the, just like this is the candle over here. So you can put the stop loss over here on the high of the previous candle. However, this stop loss will be taken out in the market. As you can see that the price is taken out the stop loss. So we will be again selling from this level. Okay. So there are two to multiple entries that we sometimes have to take out if the price hits the stop loss ending. And as I told you, the finer detail or the finer thing to actually sell is from this order block over here. From this, putting your stop loss exactly on the high of the order block and starting your target when the price mitigates this order block, and then targeting till the major breaker structure till over here. Okay, targeting till the major breaker structure. This is 9.74 ARA. Now you guys might thinking that the price has started taking out upside as well. So as I told you, if the price starts creating a series of lower highs and lower lows, something like this, you need to start trailing your stop losses as well. So once the price actually gives me last lower high from here, what I'll be doing is I'll be putting my stop loss above this level, and this is where my stop loss will, or you can say trailing stop loss will get hit after realizing my 1:4 risk reward. So now from this point, what did happen? The price another time started creating a major higher highs and higher lows from here, and you can see that the price is created, you can say taken out this previous liquidity or inducement in the market, from where we can say this is the major support internally. Okay, this is the major support over here, but this is internal major support in the market because the price is again taken out the inducement in the internal function. Now, what happened over here? Because this is the major resistance. Okay, and if the price goes above this level, then I told you, you will not be looking for selling. Now, this is a kind of a consolidation that you have to be very much looking for, because again, either this momentum, okay, what will happen internally once the price starts going lower highs and lower lows, price takes out the previous highs and then again starts creating lower highs and lower lows, and we can again enter into this trade from this point. So if I teach you over here, this is the major point where you can start trading again, even if you have already taken a trade from this level. Okay, something like this. So you have to very much carefully understand. It's very easy, guys. I'm telling you, once you understand the logic and once you and practice it with me in one-to-one live sessions, it's very easy, and I can show you hundreds of my accounts in which I have made hundreds of dollars of profit on a regular basis. So once the price has started creating a series of higher highs and higher lows again, we are waiting for what? We are waiting for the price to give me a lower high and lower low again, so that I can start selling again. So what had happened from here? The price created a series of higher high till over here, and from this high you can see that the price directly went down in a single leg. Price never gave me any swing of lower high and lower low, so there was no point of entry over here. Okay, there was no point of entry over here. Rather, what I'll be looking for is that if the price gives me any kind of lower high or lower low, even from here I will be entering into the trade towards an upside. But what did happen from here? After creating internal resistance, because the price took out another inducement at this level, this is the major resistance that you have to mark. And what is happening from here is that the price is actually creating another higher high and higher low. That means what? If you will look over here, the price is sustaining the highs. Okay, the price is sustaining the major lows on a higher level. That means the price shifted from this major high to this major high, or this major low, and then again a creation of a higher low again. So that means the price is not in the mood to go downside. Okay, do understand the price action, and you will be understand that this is not the case of the continuation trade. Rather, this is the case of a you can say a reversal trade in the market, and we will be targeting the external liquidity above this level. Okay, so from here you will see that while going upside, okay, while going upside, the price created me another swing or a higher high and higher low from here, and I can start a trade from this level, putting my stop loss on the low of this level and then targeting towards the higher, something like this, even targeting this liquidity. And if I'm right over here, if this trade really works out, it will try to take out the above side liquidity as well, because if you will see, there are major lows over here. This is the near chalk, was the previous chalk, so there are n number of, you can say, liquidity points above these levels. And in the future, I don't know if it goes down or not, but accordingly we are going to trade a stop loss. I don't know what will happen in the future, so my expectation is over here. However, as I told you, while the price is creating a series of higher highs and higher lows, while going upside, we are also going to trail the stop loss. So once the price starts creating a higher high and higher low again, you can see that the price give us a higher high and higher low again over here, and we are going to trail the stop loss on this level. Why? Because if the price takes out this major inducement, then the price will give us a major resistance over here, and we will be able to trade again once the price starts creating a higher high and a higher low. So once my stop stop loss hits on this major inducement level over here, I have realized another 1:3.25. And you can see till now we have no stop loss except for this lower low trade. We have no stop loss in the last 4 trades. We have made more than 1:10, 1:7, 17 plus 1:4 plus 1:3, 17 plus 7, 24 risk reward in the market minus one stop loss. I believe that is 23R. So now what happens from here is, now what we will see is the price has started creating a series of lower highs and lower lows. If the price wants to create a sell swing, the price will create a series of lower highs and lower lows. And from this point, we need to understand that while going downside, the price will create a support and then again create a series of higher highs and higher lows. Okay, this is where you need to be very much rebalance yourself. So from this point, what did happen? The price created a support, and from this major support over here, what did happen? You can see that the price first went up towards the downside again and then went up again. Okay, now there are 2 points again on the entry. First entry is on this breakout over here, putting the stop loss. If this is a breakout candle, putting the stop loss on the low of the previous candle. So this is the low of the previous candle where we will put the stop loss like over here, and we will be targeting the internal breakout structure over here. So this will be another 1:4 risk reward in the market. Okay, and another trade that you know is once the price creates this higher high and higher low, we wait for the price to come to this major order block over here and mitigate it, and you will see that the price has not taken out this order block again and again, mitigated, and then only we will be taking the trade. So this will be another entry from here and putting the stop loss over here and targeting towards the upside till over here. 5.49 risk reward will be there. In this case, it was 1:4. It is in this case it is 1:5.5. Okay, now from here, what you will see is that the prices again started creating a series of higher high and higher low like this, and this, and this, and this, and this, and this, and this. Okay, now what had happened over here? It's very important. Look at this. This is a range. Okay, you have to understand, you cannot trail your stop loss over here. Now some people might be thinking, why not just trail the stop loss over here? If you will, like, the range is going something like this, and this is the internal pocket range that the price is created. So do not trail your stop losses on the internal pocket. And this is very important point that we discuss in in the mentorship program, in the one-to-one training program, that you do not need to trail over here. You need to trail over here. Why? Because this is the major inducement. When the price will take it out, only then we will understand that the price has created a series of a lower low. So from here, the price has created a series of higher high and higher low. And in this trade over here, you can see that the price has taken out the major upside liquidity over here, and the price has also given us a proper target in the market. Now from here, what we are looking at, internally the price created another resistance from here. Why the price has created another resistance from here? Because internally the price created a, you can say internally something like this was happening, and then finally price took out this major liquidity and finally stopped moving towards the upside. Now this major internal liquidity is also taken out to mitigate these stop losses only. Exactly in our setup, we do not trade on the basis of liquidity, only liquidity itself. We try to trade on the basis of swing highs and swing lows only, including the concepts of liquidity like inducement and market structure and order blocks. Okay, so from here, what you can see is that the price is creating a series of high highs and high lows. And what did happen from here? If you look over here properly, this was the major high, and the price broke this major high. Okay, price broke this major high. But is this a confirmed breakout or is this a sweep? Okay, in my past videos as well, I've told you this is just a sweep because the price is not closed above. If the price would have closed above this level, only this would have regarded as a breakout. Okay, so price went down again, price went up again, and you will see that the price has created another sweep over here, another sweep over here, and from here, from this major sweep, what did happen? What we can say is that the price is actually doing what? The price is actually transferring its major resistance from here to here. Okay, and this whole thing will be considered as a single leg from here. So you will see that the price has created a legs from here. So this whole leg, something like this, is like this. Price created a higher high and like this. This is the major higher high that the price is looking at, because this was the last breakout point, and the price has confirmed that the price has taken out its resistance, or price has transferred its resistance from here to here. So this is the last buy leg that you will see that the market has created now. Okay, now from this sweep level, what we need to understand is that the price created a lower low. From this, as you can see, the price was creating high high, price created a lower low in the market, taking out the inducement, also triggering that this is one of the major important breakout structure in the market or major resistance in the market. So what we can do from here is, as I told you, once the price has given us the inducement, and if the price really wants to go towards the upside, the price will create another series of higher highs and higher lows. But in this case, that is not happening. In this case, the price created a series of lower high like this, lower low, lower high, low. Right, price is creating a series of low highs and low lows. Now over here, sweep is also a part of a reversal market nature in the. That means if the price is creating a resistance after the sweep creation and is creating, you can say lower highs and lower lows, what we are going to do, we are going to take a sell trade in the market, or you can say a reversal trade in the market. So this will be our another entry point. When the price created this lower high and lower low, we will be targeting, you will be stop loss will be over here, or you can put the stop loss above this high as well. But this is where the good stop loss is, and we will be targeting where we will be targeting. Since the price is actually giving us a lot of liquidity points at this level, we will be actually targeting towards a breaker structure, because this was all internal, guys. Okay, this is all internal structure when we were trading in the market, and this is all internal structure. But as soon as the price on the upper hand, or while creating a buy leg in the market, is giving me a sign of reversal, why will it do that? Because now it wants to continue its major, you can say external structure: lower high, lower low, lower high, lower low, lower, sorry, lower high, lower low. Okay, so this is what we will do. This is how we take the trades in the regular market on the regular basis. And while doing this, there are other points as well we will be discussing where we can take another trades as well. In this swings, there are a lot of trades. Okay, so continue the video, guys, and if you really liking it, please hit the like button, and if you have any questions, please do ask in the comment box. Now in this case, if you will look over here, if you are able to hold the trade well, you will be getting a, you can say, risk reward of 17.2. Now over here, what we are looking at, once the price starts creating a lower highs and lower lows, we are looking where the market creates a support. So price creates a lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then higher high. Now this is one major point where you will see, after creating or taking out the inducement in the market, the price created another major support level. So this is the major support level over here. Okay, this is internal support. Now we have to look in the further price action, as I told you in the previous thing as well. Since the major direction, internal direction, was upside, as you can see that the price has created a series of high, high and higher low in the internally, we can look for a buy entry over here, because in the future we do not know whether the price wants to continue over in the internal direction or the external direction. But if we are looking for buying only, you have to understand that you will be looking for buying in the series of higher highs and higher lows only, not in a series of low highs and lows. So what had happened from here is that the price created a high. From here, the price again started going downside, up, down. Okay, this is again lower low over here, and then finally the price created another higher high, higher low, and a higher high. So now what is happening over here? Can we take a trade on this higher high? Yes, we can, because still now the internal direction is towards the upside, and it is possible that the price will go towards the upside, mitigate any of the stop, order blocks from here or from here. It's very easy for the price to do that. So do not think, or do not anti-think of your proposal. Still the market was in, upside direction. We can take this trade very surely. Okay, even if it's a stop loss, doesn't matter, because even if it's a stop loss, we will know that we are wrong, and we will be looking for downside direction. Okay, so from here, what did happen, that the price created a continuous series of higher high from till over here. Price broke this major low over here, major high over here. So price created a series of higher high, and if the price continues, we'll be looking for buying again. But what did happen from here? Creating this resistance, the price started creating a series of low high and lower low again. So first of all, our stop loss will hit. Okay, that's not a very big thing, because we are making good profits while we are doing trading like this, even if it gives us some stop losses. Okay, now when it is giving the stop losses, we have to look what is happening from here is that the price is creating a lower high, lower low, okay, and then lower low again, something like this. So let's see if the price took out this previous high or not. So high of this candle is 76 and high is 77. So this will be regarded as a single leg in the market, something like this. And also while doing that, the price has broken out the major resistance zone. So the price is also did what? Price has broken out this major, you can say, internal support over here. Now from here, what did happen? Price actually started gaining back its momentum up right from here, and then started creating a series of lower high. So after the breakout of this major support, we are going to do what? We are going to take a sell from here, putting the stop loss over here, right? Something like this, and targeting what? Targeting the internal liquidity or the internal structure till over. Okay, we cannot control the situation. We cannot trade the stop loss. We have to highly target this one. Okay, so or you can do what? You can also target, if you are a whole trader, you can also target this level as well. But my suggestion is do not try to go like that, because when the market is giving us some panic momentum, see, the price is not creating any lower high or lower low. This is a single leg in the market again. Okay, so when such things are happening, there's a high probability that the price will reverse, take out this liquidity, and then will go down. Okay, this is a major pattern, or this is the initial pattern, or very repetitive pattern in the market while the price is giving us a price action. So from here, what did happen? The price took out this major inducement. Okay, the price took out this major inducement. Your internal chalk is at this level. Your internal chalk is at this level. So if the price breaks this, then we are looking for buying opportunity. We are not looking for selling. But till the time the price is actually not breaking this level, we are looking for downside direction only, because the price gave us a good internal chalk from this level. This was a good breakout from this level. Okay, so what had happened? The price started moving towards the upside over here like this, And again, as I told you, if you're looking for a sell side opportunity, we need to look for the lower highs and lower lows. But in this case, there was none. So we cannot take any sell entry from here. And what had happened from here is that the price created another lower low, or sorry, higher low, and a series of again higher high and higher low again like this. Okay. After taking out this, we are waiting for what? We are waiting for a good opportunity. If the price gives us a lower high, lower low, then we would have taken this trade. From here, what had happened? The price directly dropped down towards the downside without giving us any lower high, lower low again. So we will wait for what? We will wait for another good buy leg, and then we will be waiting for sell. So from here, the price started creating a series of higher high, higher low, higher high, higher low. Okay, something like this. Like, and from here again, the price dropped down in the single direction towards the upside. Okay, so this is not where we trade because these are panic momentums. We wait for a proper, you can say, momentum in the market where we are looking for lower highs and lower lows. Okay, so price again started doing higher high, higher low, higher high, higher low. This is another buy leg, and from here, once the price creates this resistance, okay, you need to look if there is any kind of supposedly the bullish nature in the market. So what did happen from here? The price started going downside like this, again created a lower low, lower high, and lower low. Okay, so this is where you will put up your sell. This is where you will start putting up your, you can say, targeting the external liquidity towards the downside. So this trade is right. This one was stop loss. This was right again, and this is one another trade that we can take in the market. And what till that price is creating series of lower highs and lower lows again, we are going to trail the stop loss till that level. So we are going to trail the stop loss till this high, and then next this high. When this was high was taken out, only then the stop loss will hit in the market. So as you can see, this was another 1:5 risk reward, and then the price suddenly started moving up, okay, over here, and you can see that the price is creating a major support in the market after taking out the inducement level. So this is another breakout structure. If the price goes below this level, this will be regarded as a breakout structure, and you can see in the future as well the price has hit it. But till now we will understand how the price can give us any entry from here. So from here, what did happen? Again, the price will create a buy leg. So the series will remain the same. The price will create a series of high high, higher low, high high, higher low, higher high, higher low, higher high. And this is the first place you can see that the price has created the major resistance by taking out the major low of here. So price created, you can say, let me delete this one. And price did create a resistance over here, somewhere around over here, and then creating lower highs and then creating equal lows. Okay, this is an equal low over here. So we will not be looking for selling right now. We need proper lower high, lower low in the market. Okay, and even if, let's say, sometimes in some brokers, what happens is instead of creating these equal lows, you might see a small breakout. You need to take entry on that breakout, putting a stop loss over here and targeting towards a major breakout structure. So this might be a place where you will hit a stop loss, because I told you so many breakers have pip to pip difference, and some will, some brokers will show you this as a higher low as well. Some brokers will show you this is a lower low, but this is the case where you can put your first sell in the market if the broker is not showing, if the broker is showing lower low. So from here, what did happen? The price gives one stop loss and then started creating another higher high, higher low, higher high again. Okay, this is where another time the price started creating towards the high, and this is known as the internal chop in the market. Now the price is in upside direction internally. It is not downside. So we are not looking for selling until unless the price gives me a good conjecture that the price really wants to go towards the downside and not towards the upside. So from here, what did happen? The price needs to create a sell leg. After creating this buy leg, the price needs to create the sell leg, something like this. Okay, so we will be waiting for the sell leg to happen in the market. So price created something like this, and then price created a new something like this, and then price went down. From here, the price went up, down, and up and up. Now what is happening over here is, as you can see, what is happening is this is a buy leg, okay, and sell leg is something like this, lower highs and lower low. If you look, the only case the sell leg will be formed is when the price takes out this level. Only then it will be considered as a lower high, lower low. So a small significant trade that you can take in this momentum is when the price internally starts creating lower low and lower high. You can take a sell form here, put your stop loss over here. Why? Because internally when the price is made something like this, and internally the price is creating lower highs and lower lows, there is a high probability that the price will create a lower low on the bigger picture. Okay, so internally what we are doing, we are taking a very small trade over here. You can say the stop loss is somewhere around 7 pips in the market, and we will only just target. You have to remember, you cannot target towards the downside. Even if the market is going downside, you can only target till over here, because this is the case where the price will create a lower like this, and then the price can go up. Okay, so this is the case. You need to understand that you can take a very small trade till over here. It might not be a lot of points over here. It will be only 2.81. However, this is very good trade in the market, because we know that the pending leg in the market is the sell leg and not the buy leg. Okay, so this is the first sell leg opportunity. And then what had happened? The price continued, rather than giving us a support and creating a higher highs and higher lows. What had happened? The price continued its major momentum towards the downside, something like this. Okay, and again, from here, price created this lower high, lower low. Price has not given a support, because after the internal shock in the market, what I was waiting for, the price to create a support and then start giving us higher highs and higher lows, but that didn't happen. As you can see, what did happen? The price created, continued the series of lower highs and lower lows, giving us an internal shock. The price took out this major liquidity towards the downside, giving us an internal shock again towards the downside again. Now we're not looking for what? We are not looking for selling. We're looking for, we're not looking for buying. We're looking for selling again. So what did happen from here? The price created a higher high from here. Now, this is the major internal boss, or you can say this is the major internal liquidity that the price is created from. So this will be regarded as an internal breaker structure. And also, the price is taken on this major liquidity in the boss structure. So from here, what you can see is that the price created a support. And now from this point, if the price hits a resistance, create a series of lower highs and lower lows, we'll be looking for downside. Okay, so price created as you can say resistance over here, started creating a lower high, lower low. So this is where you take the sell opportunity, putting the stop loss on the high of the previous candle, some open price, and then targeting till what? Till the external liquidity over here, and then targeting, if you can hold the target till 1:3. Okay, now because there was no in between lower high and lower low, you cannot trail your stop loss. So the maximum point that you can target is the breaker structure, giving us 1:1.89. Okay, so some swings give us good opportunities, something like this. Some swings even give us opportunities like this. Some swings give us opportunity like this only, 1:1.89. But till the time you're making profit, you don't need to judge yourself. You don't need to be unhappy about the things that you're doing on a regular basis. Okay, from this point, what did happen? The price created another breaker structure, or you can say major support. Okay, why is this major support? That you can tell me very simply that the price has taken out this major liquidity, or you can say inducement in the market. Okay, and while doing that, the prices also started creating a series of higher high, higher high, higher high, higher low, higher high. So from here, what did happen? The price created a series of higher high and higher low, and then from here, the price created a resistance in the market. As you can see that the price created a lower low. So from this lower low, if the price gives us a combination of lower highs and lower lows, then we're going to sell. If that doesn't happen, or rather the price goes up, which I've told you this is many times happened, the price goes something like this and this. Okay, this is one of the pattern where we take the reversal trade. So if the price gives us a good, you can say higher low and higher high from here, we will be taking a trade towards upside, but that didn't happen. You can see that the price directly went up, not giving us any higher low, not giving us any higher and higher low, and directly moving towards the upside till over here. So this is how the price is giving us an internal shock level in the market. Okay, internal shock in the market. So from here, what did happen? The price another time gave us lower highs and lower lows, something like this, and then finally did what? The price created a support, giving us higher low, higher high, higher low, higher high. Since the internal structure, or you can say the market structure was upside, we can take a small entry towards the buy side from here, putting the stop loss somewhere around over here, and targeting what? Targeting the external liquidity or the till over here in the market. Okay, so this is another 1:3.26 in the market, through 3.26 is to what in the market, and from here what you can see a sweep. And as I told you, in the sweep, what we do is after the sweep, the price creates a lower highs and lower lows. That means the price wants to give us a reversal direction. So we can take a small sell from here, putting the stop loss somewhere over here, and targeting towards the downside till over here, or even major breaker structure like this. Okay, it's very simple, it's very unique, and you will see that in the future that the price will take out this liquidity. Okay, so from here, what did happen? As you can see that the price has taken out our liquidity. Okay, what did happen? The price took out a stop loss. So price started creating a lower highs and lower lows, something like this, and this, and this, and this. And from here, the price created a support. Okay, from here, the price created a support. Now, from here, what you can do, either you can trail the stop loss till over here. Okay, either you can trail the stop loss till over here, because if the price takes out this level, then that means that the price will try to, you can say, continue the momentum towards the upside. And or you can basically, what you can do is trail the, you can say, target till over here. So if you trail, you will not hit the stop loss. You will get somewhere around 1:1. But if you do not trail, you will get a hit a stop. So from here, what had happened? Price started creating a series of higher high, higher low, higher high, higher low, higher high, and price swept once again. If you look over here, price sweep once again. Another time what we can do is, if the price uses a series of lower highs and lower lows, we can directly sell. So from this lower high, lower low, we can sell from here, putting the stop loss somewhere on the high of the previous candle, and targeting what? Targeting the external liquidity market somewhere over here. So this will be a 5.37 risk reward trade in the market. You can look at yourself. This is a 5.25, and continuing the market structure. What did happen over here? The price continued a series of lower highs and lower lows, something like this: lower high, lower low, somewhere over here, lower low, and then finally taking a breakout. If you have trailed the stop loss, you will get the stop loss somewhere over here. If you have not trailed, then you will get, trade target till over here. So there are both pros and cons of trailing the stop loss and not trailing the stop. Okay, guys. So we will continue this video in the next future, in the coming future. So do not forget to subscribe to the channel, the Blackjack Trading, and hit the bell icon, guys. I'm putting a lot of SMC videos and regular returns, real trades in the market, real live trades. You can look at it. You can watch the news trades as well, and you can learn a lot.
And if you really want to become a professional trader and want to join me and with our team to understand these concepts and take regular trades like this, you're most welcome to join us and contact us on our WhatsApp number 92580466887. Until then, take care, guys. If you have any questions, do put it in the comment box. If you like this video, please hit the like. Till then, take care and see you in the next video.